and welcome to Markets Today. I'm Lata Venkatesh, and joining me from Delhi News Centre is Surabhi Upadhyay. It was a down day for the markets and has ended up as a down week as well, with markets going from weakness to weakness. The strange part of the Friday trading was that the pharma stocks, which seemed to be a pillar of strength or at least a refuge, also started crumbling, and the market of course had to seek support in some stray stocks, some handful of IT and banking stocks. All told, the market clearly has lost its nerve and the Nifty has lost its hold over the 8,600 mark. Hi Surabhi.
Hi Lata, yes, what a weekend, what a way to end this week for the market as well. Very few islands of hope in an otherwise sea of despair. Plenty to talk about over the next half an hour. Let's start with the headlines. Dalal Street continues to reel under losses for a third straight day. The Nifty slips 0.7%, closing below 8,600. The Sensex loses 200 points. FMCG, power and real estate stocks lead the fall.
Broader markets, that's the mid-caps, see capitulation as that index falls 1.5%. High beta stocks like HDIL, Lanco and Hindustan Construction fall between 7 and 9%. Indian hotels falls 4% on uncertainty over whether the Taj Mansingh property in Delhi will be retained by the company.
NTPC ends down 6% as the arbitrage play in the bonus debenture issue ends. Yesterday was the last day to buy the stock for availing bonus debentures under the 1:1 bonus issue announced by the company. The stock goes ex-bonus on Monday.
Okay, so those were some of the themes that played out in the markets. There are more, and here are the experts that we have lined up on the show for you today. Jeff Chaudhary of LGM Funds will tell us where India stands in the pecking order among emerging markets. Stock market veteran Dheeraj Agarwal analyzes the near and medium-term trends in the stock market. We will also have Mining Secretary Anu Pujari outlining the government's mining plans after the passage of the MMDR bill. We will also get to some of the managements of companies that were in the news, notably Sanjeev Kapoor of SpiceJet.
All right, let's start first with the trading action. Though it was another disastrous session on Dalal Street, the day was marked by volatility yet again, with the key indices going into a tailspin. Let's now go across to Anuj for a detailed wrap of the day's trading highlights. Anuj, no place for Pakistan to hide and no place for the bulls to hide either in this market.
Well, clearly, so India will be facing Australia in the semi-final, but for the bulls, they are now facing the biggest enemy, the bears in party mode, and bears with so much ammunition right now. In fact, today was such a bad day for the market yet again. At every point, you could have shorted, or bears could have shorted, and they would have made money in this market today. In fact, the mid-caps took a big tumble today. That was really the big talking point, because so far the mid-caps were resilient, but today you saw first sign of panic in the mid-cap space. Quality mid-caps, high pedigree mid-caps are falling apart, and we'll discuss some of these stocks in a bit. From the top, the Nifty is now down 6%, the Bank Nifty is down 11%. Let's talk about some of the stocks that led the market down today. ICICI Bank, again, top contributor, 3.5% lower. This stock has now corrected 19% from the top. ITC was down 2%, Lever was down about 3%. Some more names which were on the way down today. NTPC, where the opportunity to buy the bonus debenture is now over. That stock was down 6%. Jindal Steel and Power was down 5%, and BHEL was down about close to 4%. Metal stocks were down, commodity stocks were down, so it has stocks like Tata Steel, BPCL, both of them down quite a bit in trade. But the disconcerting bit for the bulls was that even pharma started to correct today. Sun Pharma was down about 2%. Now let's talk about the mid caps. Now these three stocks are only representation of what happened. The entire top traded screen was in the red today, and you can make sense of what would have happened to other high beta names. Stocks like, okay, that's the standard performance first. Wipro, Infosys and Ken India, all of these doing well. IT in particular doing well. But let's talk about the mid caps, and where we saw quite a bit of selling pressure in trade today. HDIL, Lanco Infratech, Unitech, take a look at that, 7 to 9%, and that was the case with most high beta mid caps. But let's talk about some of the stocks which have been erstwhile the strong performers but are now correcting. Stocks like Spark, that was down 14%, Wockhardt was down 4%, and NCC was down about 3%. So for now, it looks like bears are in total control of this market. Next week is expiry week. Expiry weeks are normally about trend, and trend right now is clearly on the way down.
That point is taken, Anuj. One thought that at least before the weekend there could be some short covering, but it looks like the market has very few shorts, and actually it was longs that had piled up on every counter, and people were selling before the weekend actually and hardly covering. The key point to note is that for the third time in a row, this market is not able to capitalize on good news. We saw that on March 4th on the rate cut day. We saw it on March 13th when the insurance bill was passed and we thought that the markets would make a climb. And we saw it again yesterday when after the Dow Jones gave you a reason to rise after the Fed sounded more dovish than was expected. The Indian markets could not capitalize. They've gone into weakness yesterday and went further into weakness, failing to hold that 8,600 mark. And actually the weakness is all over the place now. Even pharma has begun to sell, and only for the day the IT stocks seem to just be the area of succor. But at this point in time, it is weakness all pervading.
All right, on that note, let's get some expert opinion going. Jeff Chaudhary, Senior Emerging Market Fund Manager at LGM, says there is a need to be selective while investing in emerging markets, but he maintains that India continues to be one of the top picks.
India is doing pretty well, Philippines is doing very well, Indonesia is doing pretty well, North Asia is doing not too bad, China is doing... So, you know, I could go on and on and on. So I think one has to be very selective about which emerging markets you invest in. And I think in that context, I think India is pretty well positioned. Earnings will do better as we travel through 2015 and 2016. However, two other things to just bear in mind is the first thing is that positioning, i.e. emerging market investors, are very, very long of India. And so, you know, incrementally, I think that's going to be more difficult for the market to go up. And secondly, obviously, in the pipeline, the government, as well as corporates, have got a big pipeline of issuance. And I think that may sort of, you know, hold things back a bit. But having said all of that, I think, you know, we're still positive in India. We like the long-term outlook, and we're still overweight the market. We like the consumer sector across the whole spectrum, consumer, right from large cap, you know, like ITC, all the way to sort of smaller cap companies like Bata and Emami, for example. So we like the consumer space, and we continue to like our old favorites, which are the pharma stocks and the IT stocks. So those are the four areas that we like in the Indian market.
Okay, so that's the view coming from a longer-term investor. But let's get short-term and get you the day's action from the futures and options space. Nigel D'Souza is joining us.
Well, in the derivatives market in today's trading session, shorting the Nifty yet again made you money. Importantly, just look at the options data. Call trading made you big money today as well, because we did see the 8,600 call that was aggressively getting written. The 8,700 call as well, the premium over there fell from around 45 rupees all the way to around 26 rupees. So call trading make you money there as well. But it appears after the sharp correction of around 550 points from the top, there seems to be some kind of base, because today the Nifty ended down by close to around 50 points. But importantly, at that 8,500 put, we didn't see the premium go up. In fact, it fell from around that 30 rupees to sub 25 rupees, indicating there is writing at that level, and maybe the Nifty is forming a bit of a base at that particular level. Take a look at NTPC in the cash market. That stock saw big selling, while in the futures market, it came in for a bit of a short covering bounce. That's because a technical adjustment took place on that stock. We did see on BHEL there was big shorting on that particular counter, and when the markets are weak, we always see aggressive shorting on high beta. So Unitech as well as HDIL, both of them were the candidates, and they were under shorting pressure all through the trading session. And finally, Jubilant Foodworks was a bit of a star in otherwise a weak market, because that stock did come in for a short covering bounce.
All right, Nigel, thanks for that. Let's move on to the big story that was dominating mindspace in the markets today. In what will come as a major relief for the Modi-led government, the Lok Sabha today cleared the Mines and Minerals Development and Regulation Bill. A select panel of 19 Rajya Sabha members approved the bill with 2 amendments, while 4 had a dissent note on it. Mine Secretary Anup Pujari told CNBC TV 18 that the government will consult the states regarding certain norms on the bill.
जहाँ माइनिंग चल रही है वहां पर डीएफएम में जो आने वाली राशि है वह राशि रॉयल्टी के बराबर से अधिक नहीं होगी, एक अमेंडमेंट ये है। और दूसरा, डीएमएफ के जो नियम, कृत्य और स्वरूप बनाए जाएंगे उसमें वन अधिकार अधिनियम, पेशा और अपना ये अनुसूचित जनजाति कल्याण जो अधिनियम है, इन सब का ध्यान रखा जाएगा।
After the bill becomes an act, we have to publish what is called the rules by which the auction will take place.
Right.
And as you have seen that everybody wants to say that you must consult the states.
Right.
So therefore, even if we publish it today, we need at least 2-3 weeks to consult the states.
Right.
So therefore, it may take some time.
Right.
All these things are under preparation.
Right.
So I'll not be able to give you a timeline on
But
that.
will it happen within this year itself? Auction in Kansas State starts?
Oh, of course.
And states will have to do the auction, sir?
Everything under the MMDR Act is by the states as far as the MMDR minerals go. Everything.
And miners will have to take a hit because of the district mineral fund, sir?
Well, if you think of a hit, why not I put it this way? Today the mining sector is not producing. So therefore when it starts producing, a certain amount will come to the state government.
Right.
So therefore if you look at the hit, I would think that the production will start, so everybody will benefit.
All right, so that's a sentiment positive move for the Modi government. But how will this impact companies? What are brokerages making of this law getting passed? Nigel stays back, of course, to tell us all that. Sorry, Nigel, we couldn't let you go. Tell us about the MMDR bill's impact.
Well, the big highlight with regard to the MMDR bill had to be the DMF, that's the District Mineral Fund. Remember, that's the fund that's created for the welfare of the people of that particular area where mining's taking place. What is the payout in terms of the DMF? It'll be 100% of the royalty paid for existing miners, while those miners that will secure mines in the upcoming auctions, they'll have to pay a third of the royalty towards this DMF. Now, the big change is that analysts were working with a number of around a third of the total royalty. Now those numbers will be reworked because now they'll have to pay an equivalent to the royalty towards the DMF, and that's something that will hit their margins as well as their EPS. The companies that will be most impacted are the likes of Tata Steel, SAIL, NTPC, and importantly Hindustan Zinc as well will get hit. Remember, royalty rates went up in the last few months. If you just look at it, the numbers are up for you on the screen. Iron ore, bauxite, zinc as well as lead, they have seen a hike in all those royalty rates, and now the DMF will be an equivalent of the royalty that they will be paying. So certainly it's going to hit all these companies. JP Morgan came out with a note. They said for Sesa Sterlite in particular, it will hit them. That's because Hindustan Zinc's EBITDA will be lower by nearly around 5% for FY17, and the EPS as well will get a hit of around 5%. EBITDA as well will take a hit of nearly around 3%. The good part though is for companies like Tata Steel, they will in fact be able to secure the iron ore that's required for their expansion in Odisha. That's the phase 2. For Sesa Sterlite, they'll be able to secure their bauxite for Vedanta Aluminium. Remember, they have been struggling in terms of profitability over there. So that's the other positive over there. While JSW Steel as well, they'll be able to integrate themselves to some measure in terms of the iron ore requirement. And finally, Hindalco, a couple of their smelters, they have been starved because of bauxite requirement. So these are all the positives for the companies. So they'll have to pay more in terms of their contribution towards the DMF, but definitely it'll be coming at a cost, though they'll be able to secure themselves of some of their raw material requirement. Back to you.
Okay, Nigel, many thanks for taking us through that fine print of the MMDR bill as it stands passed today in Parliament. Let's move on now to some specific stock news. DLF was under pressure today after the Competition Commission of India announced that it has received 2 to 3 fresh cases against the company. These are under investigation. That is the word coming in from the chairman of the CCI, Ashok Chawla. Let's listen in to what he had to tell CNBC TV 18 earlier today.
My understanding is that the Supreme Court is hearing it or is going to hear it, depending on the convenience of the bench, and that once they are through with it, we will get an order. Meanwhile, fresh matters against DLF in the area where we have held them dominant have come up, so we have sent those for investigation. In any case, the eventual outcome of all these matters will depend on the decision of the Supreme Court.
All right. Speaking of courts, a day after the Delhi High Court ordered aviation watchdog, the DGCA, to deregister 6 planes belonging to SpiceJet, the company told CNBC TV 18 that the move will have no operational impact on the career. However, investors don't seem to convinced. The stock actually traded in red all day, closing actually down 1.3%. But important to listen to Sanjeev Kapoor, the COO of SpiceJet. He clarified that this is an old financial position and the entire fleet of 32 aircraft are still flying for SpiceJet. Listen in.
The overall quantum of payment due to all lessors is significantly less than the number which is often quoted in the media. We actually owe net of funds which are due back to us. We owe about 160 crores. We've been in discussions with these lessors, and we are imminently close to announcing a settlement with one of them already, and we're very close or in very advanced discussions with the others. So we expect no operational impact from this court announcement yesterday.
All right, on that note, time for a quick break. But coming up, more market perspective from Dheeraj Agarwal, also some trading ideas for the next week.